Okay, now going to take a look at the indexes and gold. NASDAQ broke a critical support today. So we want to keep that in mind. It's been struggling at this area over here. I've talked about it in the previous videos. We had a double top before. This was a critical support. Once it broke that, it became resistance. You could see it retested it here. Retested it here. It is unable to break this area. It's a critical resistance on the NASDAQ. We had several inside bars. We broke bearish today. Clear bear break. Thus far, futures are red. This could be a potential inverse head and shoulders forming, but most of the signs are pointing to downside to me, as far as I could see. So I would be cautious over here on the NASDAQ. Our next support that we're looking at is that 100-day moving average on the NASDAQ, 13,400. Okay. Dow Jones, it's been consolidating around this area for a while. This could be distribution like I mentioned in SPY. So many inside bars trading within a tight range over here. No real sense of direction right now. Okay, let's be cautious. It's getting weaker on the RSI. It did have a bearish MACD cross on the daily before. It's getting that bearish MACD cross on the weekly. Potential double top on the weekly on the Dow Jones. I'm going to say you want to be cautious right now, being a bull. SPY, very similar to Dow Jones, potential double top on the weekly, potential bearish MACD cross forming. It got overbought on the weekly, most overbought since just before the COVID crisis. Okay, so you want to be cautious. When things get overbought, they tend to cool off. That's what we're looking at on SPY, especially on the indexes like SPY. When it gets overbought, tends to cool off, and it did over here, over here, over here. And there's more examples as well if you go in the past. So right now it's looking like at least some consolidation is due for the indexes. The VIX starting to show some strength over here on the VIX. Could be a big falling wedge on the VIX. This is when the coronavirus crash happened. The VIX took off. If you had UVXY or HUV on the Canadian side, you made good money on this move so long as you sold up here, because the VIX will always shoot up at times when the market gets bearish and when things get a little scary for people, but it will always go back down. So you need to be sure to take profits. It's not something that you hold on to. So you can get that with UVXY and HUV on the Canadian side. The VIX is the volatility index. It's basically the fear index. The more people are scared, the more people are panicking, the more red the S&P 500 is getting, the more this is going up. And it tends to shoot up every time there's fear in the markets. That's why it's the volatility index. Gold XAU had a big pullback today, broke the daily higher low pattern that it had around the 4-day moving average, or 4-week moving average, sorry, broke the 4-day moving average, which could be a little bit of a red flag. But there is room between where it is now and the 4-day moving average, so we could see a rebound to that level potentially. The middle Bollinger Band on the daily is holding as a resistance at the moment, but yesterday's low is thus far holding as a support on gold. The thing with gold is that it is a very good inflation hedge. The problem is if interest rates go up, that's not good for gold. So it's a little bit of a double-edged sword on gold with inflation. Looking at oil, commodities, oil looks like it's breaking out over here. Oil looks like it's pretty good. I don't see really red flags over here. Looks strong overall still. Oil, commodities are hot. Commodities are hot. They still look pretty hot. Platinum had a little bit of a rising wedge here. Seems like it's breaking down now. Corn, look at corn. Corn skyrocket, more than doubled since May or so. So copper, big move as well. Commodities are getting play. Commodities are getting a lot of play because of inflation. Inflation tends to bring up the price of commodities. The US dollar was pushing today. It's been hitting around this level for a while. Looks like we got a bit of a falling wedge on the US dollar to the Canadian dollar. It's similar on the DXY, double bottom potential on USD DXY. That's the US dollar against a basket of other currencies that you're looking at on the DXY. Okay. I think the US dollar is going to make a move up from here. compared to the Canadian dollar, at least, because it looks like a nice falling wedge here. It looks like a lot of support around this area. In the past, it was a previous critical support area over here and over here. And that psychological $1.20 Canadian. $1 is around $1.21 Canadian. So that psychological support level of $1.20 is holding up thus far as well. And as you could see, the US dollar goes up when the markets go down for the most part, because money's leaving the markets and going into cash, and that's pushing up the value of the dollar. So that's what we're looking at today. Keep an eye on those. Silver, I would compile it mostly with gold. Although silver has a really long consolidation pattern over here, still waiting for a break on the weekly. Bears are trying for a triple top or potential bearish head and shoulders over here. Bulls want a little bit of a cup and handle with a breakout, so that's what bulls are looking for. Commodities are still hot, so we're going to see how silver goes. We want silver bulls ideally want to break this resistance up there, and then it's blue skies for a while up to at least $35 an ounce, and then up to the all-time high of around $50 an ounce. Actually, that was the pretty much all-time high from all the way back in 1980. Can we head back up there at some point? Want to watch this pattern. No clear signals yet to buy. Consolidating right now. Same with gold. We'll keep an eye on that. Thanks for watching.